The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 13th terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. That's what it's all about. Today, we'll go take a look at the circumstances that the bulls and the bears, the buyers and the sellers are communicating to you and I. I'm grateful for your presence here, and I'm here to serve you. So feel free, pick up that phone. Dial on in, 877-927-6648, internationally, 727-445-1044. This is Terrific Tuesday. Of course, it's the Hotel California, sponsored by Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 28 points. She's trading at 17,103. S&P off about 7 points at 2,010. NASDAQ Composite down 15 at 48.23. The Russell's off 6 points. The DAX finished down 87 points. The FTSE closed off 29. Gold is flat right now at the moment, traded at 1165, but well off of its session lows. We're going to go take a look and see what that means. Silver is up a nickel, trading at 15.91. Light sweet crude up 38 pennies at 47.49. Lead the charge to the upside. Can I pour you a beer? It is TAP. Molson Coors Brewing. Of course, there's nothing like a Molson Canadian golden ale out there. Leading the they are leading the charge, up $7, up 9%. Alphabet Soup, Google, that's up just a tad. It's up $4, but really about 0.6%. WellCare Health Plans, that's up $4. You've got Novacure up 13%. That's up $3.40. Tesla's up $4. Madison Square Garden's up about 3. To the downside, Regeneron Pharmaceuticals, I think was the upside yesterday. To the downside, down $9 off about a little under 2%. Ryder Systems off 8%, down $6. O'Reilly Automotive down $5. Monster Beverage, MNST, that's down 3%. So we'll try to check in on all those. But first, let's go figure out what these markets are communicating to you and I at this hour. Now, let's take a look at the ES Mini. Let's look at it on the 5-hour, and since we're going to go take a look at that Monster Energy drink chart out here eventually, let's go take a look at the Monster Energy drink, the 5-hour chart for the ES Mini. Now, what I want you to focus on and pay attention to is we really have two patterns out here on the 5-hour chart worth noting. One, price has, well, there's actually three patterns now that I look at it. Now that you look at it as well, you see those three patterns, right? You see price was moving higher with less relative strength out there. That's designated by my little up-angled arrows. If I were to expand out the bottom of the screen, you'd see the same thing on the opposite side. Utilizing the relative strength index or indicator out there. So when price moves higher with less relative strength, that means that you and I have got to pay attention to it. Second pattern out here, you can see we're in what could be a seventh wave to the upside. Oftentimes the market will go ahead and reverse. Doesn't matter what time frame it is you use when you get to those 7-wave patterns. Now that's coming off of this time frame right here because this thing really recycled right at about 2 o'clock in the afternoon on October the 2nd. Out here. Third pattern is we can see that prices, for the most part, on a 5-hour chart, for the most part, has been contained within its TAS market profiles. Now, that says that 1993 and a quarter is or should be some decent support for the 5-hour chart. If we start to see combination of really three things we can look at, bullish side and the bearish side. Let's go with the bearish side first. First, you need to see some type of reversal candle. You actually could get a shooting star here. Now, this candle doesn't close until 2 p.m. on the 5-hour chart. So we've got another, 49 minutes, 48 minutes until this closes. So remind me before we go off the air. We'll go see if this turned into a reversal candle, such as a shooting star. If it doesn't, that's okay. And even if it's a green-bodied candle out here, it's the next candle. So it's the one that would take place with the closing contract today that could actually give you a signal. Of course, the real signal in the 5-hour chart that you want to pay attention to is either the top of that TAS market profile. Now I'm going to have to say it's got to be the top of at least today's the candle that we're in right now. So it's somewhere around 2014, I believe. But the top of the box is 2009, 2010. So that's some significant resistance. If you see price close below 1994 today, it'll be the first time that we've seen it close below a market profile low since we came off of the bottom, since we came off of that shooting star cousin, the hammer down here at the bottom, coming into the contract close on September the 29th out here. So these are patterns to now, and if we see that, plus if we see some new how about that as well? But if we also see some new market profiles that start forming at lower levels, that would just be one more indication that we're going to see a retracement to where I'm uncertain of that. Could be just simply a dead cat bounce to the downside, right? A 0.382 retracement. Maybe it's a 0.618 retracement. Maybe it's no retracement at all. But we do know that inside the ES Mini, we've got some elements, some areas for us to watch that'll give us a clear indication as to what the market wants to do. If we look at the 5-hour chart and take a look at the NASDAQ out here, we do not have those same patterns out here. We don't have where price has been moving higher with less relative strength out there. So we don't have that pattern set up. So we do not have synergy amongst really the powerhouse in the market, the NQ and the S&P 500. We also don't have any kind of seventh wave out here. We're in wave number 6, so it's worth noting and paying attention to. We do have market profiles that price has been traveling within. So that says that somewhere around the 43.39-ish level is probably a 43.41, somewhere right around there. Is it the bottom of its box out there? If we see price close below that, in combination with the S&P futures contract, the ES Mini, that would be an indication that things are beginning to crack out here. Let's take a look at the Dow futures as well. Let's go round this out. Well, we'll take a look at the Russell 2000 also. Let's take a look at the 5-hour chart here for the Dow. Now, what we'll see in the Dow is that its seventh wave actually formed out here coming into yesterday's close. We then, during the next session up until about the 11 o'clock time frame last night, had a nice little bear sash candle. We had some follow through to the downside. That says this pattern is pretty well cemented in. Maybe it's the Dow that's really giving us a signal here. Now, things have not really cracked. We did see it close at 9 o'clock in the morning, just below the bottom of its TAS market profile. Still, that level has acted as support. We saw price obviously bounce off of that. But the Dow here, of all of the three that we've now looked at, the Dow is the one that actually has a confirming signal to the downside. So I would say like this. I would say it's the Dow that is the most important chart for us to pay attention to if the market were to break topside, because it really should come from here. There's nothing more bullish than a failed bearish pattern. And in essence, we've got two of those patterns out here. We'll call it three with regard to the market profiles. So we've got three patterns out here to pay attention to that say, hey, you know what? The retracement has actually begun. Dow's off 27 points. You just can't tell based on, the market, which has been down. It was down this morning right off about 80, 90 points to the downside. Made its way back to, 30 points or so to the upside. You're now off 27 points. Let's finish this off, though. Take a look at the Russell 2000. Let's stay in the same time frame out here. Now, this chart is going to be delayed by 10 minutes. As we take a look at it, let me update it. Looks like it actually was moving higher with less relative strength out there. So that would give us 2. Yeah, it was. The candle that we're in right now looks like that is a bearish engulfing, bear sash style candle. So just like the Dow, the Russell 2000 appears to be giving us a message as well. And that would say that the market should begin to retrace to the downside. So that's really the message in taking a look at that 5-hour energy drink. And as long as we we've done that. Let's go take a look at Monster Beverage out here, MNST. Let's go see what its 5-hour energy drink is doing. It's trading back inside the August 24th swing point. Never a good thing with the market rejecting that level. Monster not rejecting that level. Getting back inside the top of that range, which is 137.83. You're trading at 133.26. Very likely, Monster Beverage, if it can close below the price point of 132.60, doesn't have to do it today, but if it did do it today, what that will call it actually 131.71. Let's not be exact or anything, but that's the number we want to look at. If you see it close below that level, 127.69 is in the cards for Monster Beverage. Oh, we can see what it was doing out here when the August 24th level rejected its lows out here. Let's go take a look at what that was, because then it gives us another line of demarcation where price ought to travel to. And I would say it's really, there was a sign of strength, a couple of them, inside of Monster Beverage. You had Monster Beverage on February 27th move higher with 6.2 million shares. And then on the 24th, it moved back with about 2 million shares. You can see that that level acted as support. So and we actually had a little bit of a breakout, a junior breakout on February 23rd out here. So I say that 122.37 level is a key area for Monster Beverage. Could be a pullback on light volume. And then if you like the Monster Beverage chart, which really is in a consolidation-ish range between 122 and 140, you could go ahead and play it as such. Now, let's go take a look at Goldilocks out here. Let's look at it on a couple of different time frame charts. What do we know about Goldilocks? Well, we know two things. We're going to take a look at two breakout patterns, at least inside of the gold contract. Numero uno, the first breakout pattern is just simply a move above that little wedge pattern, but mostly the descending trend line coming from January 22nd, 2015. Now, when price breaks above a trend line, which you actually like to see, bulls or bears, just to give you some kind of confirmation, it's for price. It doesn't matter whether it's diagonal or horizontal. You want to see price come back and test that level on a breakout, or on a breakdown, move up and test that level and reject it. Well, in this case here, we saw Goldilocks break above that trend line back on October the 6th. Next day, next 2 days, price really came back, tested it, and rejected it, and started moving higher. We've got the break of the wedgie pattern out here, and that says that price really inside gold ought to be able to move up to about the 1222 area. That is basically what I'll call the conservative base, not referring to a political thing, but the conservative base of this triangle here that gives you a price projection. That's really what we use. It's one way to be able to identify where price would head to. So 1222 is still in the cards. Now, what gold actually did overnight and what it was doing, yeah, it was really overnight. What it did yesterday and overnight, let's go take a look at that. And for that, we're going to step back to some larger time frames out here. On the larger time frames, this is on a weekly chart. Now we have a different trend line out here. And that trend line takes us back to 2012, October of 2012 specifically. And on that trend line, you're going to just have to wait with bated breath for us to go take a look at what Goldilocks did overnight and what it's doing right now. This is Steve Rhodes with TFNN. Thanks so much for being here. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Before we went to that break, we were taking a look at gold. So we're looking right now at the continuous contract for gold. We can see that there's another trend line, a longer-term trend line that's in play that yesterday we saw. So this is a weekly chart, just simply so that you can see the breakout. We're going to switch this over to a daily chart right now, so you'll know what that red horizontal line is, different than the trend line we first looked at. And we can see that yesterday we had a break of that area. Now, what gold did this morning was it pulled back to test that trend line. So remember what we looked at on the December contract on a shorter term time frame, a shorter term trend line. Gold broke above, came back, tested it for 2 days, and then took off to the upside. As long as gold stays above this trend line, it says, hey, it's got higher price to go. We already gave you a target when we looked at the December contract. So only if it falls back inside that trend into the cone of silence will there be really any significant problems for Goldilocks. Let's go out to Martinez, California, to Brent. Brent, thanks for calling. Thanks for holding. How are you today?
You're welcome, Steve. How are you today?
I am doing great. Thanks so much for asking. And you want to take a look at Priceline. Do you ever use Priceline or for any travel, any hotel or airline stuff?
I'll use it to short the stock, but that's about it. I haven't
Okay, well, perfect. That's perfect. Are you short right now?
No, I'm not. I've been very fortunate I caught that spike high on their earnings back at $13.95, and then this most recent one at $13.38.
Yes.
As the short. And it takes a lot of patience with this stock. I mean, it's a good discipline in general, but that's what I try to do with this. And I'm looking at about 1379 potentially. Well, I'll start looking at it. I thought hopefully you can take a look at it and see what you think is potentially a good place to consider taking a short on it.
Yeah, so, at 1372 as an example, you have a completed at least lightning bolt A to B equals CD pattern coming off of that low from August 24th to the September 17th level that you sold. It then made a retracement, about 80% of a retracement down onto September 29th out here. It is, as folks, if you're watching us on Tiger TV, we can see that spike high that Brent originally sold back on August 5th. That had volume of 2.1 million shares, and price is trading with inside that level right now, which is at 1325, and prices also trading above that September 17th level, which is 1338.51. Now, in both cases, I take that back. In both cases, let's see, what the volume was 482,000, and your above it yesterday was 601. So it is above September 17th with more volume, but into that into the August 5th level with lighter volume. So you're looking at about 1379, and is there a reason that you would look at 1379 versus if it got up there to go ahead and let it just test that high of 1395? Is it an intraday chart or something, or that's just the spot to begin the short inside of price line?
Begin watching it. Yeah, I might have had the numbers a little wrong when I did my calculations. That's what I came up with the 1-to-1 was 1379, but maybe I was off by a few numbers. So that's why I initially look at it and see how it acts at that point. If I see kind of a bearish reversal like that, the 1395 one was relatively easy because it gapped up. That was the high of the day, and it started to back off, which it's done in the past, and so that made it relatively easy on that one. It's not always that simple, but that's kind of what I'm looking for is to get up and stall and make a reversal, and so just be patient, wait for that to happen.
Yeah, what I will say on the A to B equals CD, so lightning bolt that you're looking at, Brent, what I would also suggest that you do is see the C to D leg is actually stronger than the A to B leg right now. And what that tells me, when your final leg, I won't say final, but when the last leg that we're looking at is stronger, and by stronger, a couple different ways for us to look at it. One, we can take a look at how did price come off of the C point. Another way is price on the left side or the right side of the maintained same angle as that A to B. And when it's on the left side, what it is communicating to you and I is that it's actually a stronger move than that A to B level. And what that tells us is that more likely than not, and it all depends on how price reacts over the next couple of days, is that it's more likely than not that price would at least go test the high of that 1395 area. Could even get up to 1423 inside of price line. But I'll give you one other element, another area for you to watch. Whenever you do short it, at this stage, if you were to right now today, we're going to go take a look at what its market profiles are, and that'll give you some other benchmarks to watch, especially if price pulls back. Because right now, you and I looked at the A to B equals CD pattern, and it was showing us some strength. Yesterday, Priceline closed above its weekly TAS market profile high, and Brent, that's at 1336.69. So that's going to be a key area that you need to see price get back below.
Okay, thank you very much. I agree with you on that. C to D is a strong one.
Perfect. Take care. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I'm going to go back to Priceline here just for a moment. I didn't realize we were running out of time as we came into that segment. And so the one last thing that I would do on Priceline, so Brent, I hope that you're still listening here, is I went down and took a look at both a 30-minute chart and a 10-minute chart to understand where all the volume was on that breakout after earnings. And the volume really fell between the 13.25.10. So on the 30-minute chart, it was between 13.25.10. We're above that. We're certainly above it on light volume, but we sort of knew that. We took a look at the day's volume out there, and 13.95 the actual high. On the 10-minute time frame chart, though, 13.40.01. So I think it's really important to watch 13.40.01, 13.25. I don't recall what the weekly TAS profile was, so you've got that number as well, because there's always the chance that price doesn't do what we think it's going to do as we drew out those patterns, which could be a test of the 13.95, the 13, what was it, 79-ish type area, 72, 79, somewhere right around there. So I would watch these areas as well for a potential rejection, and we'll have to hook Brent up with Priceline Charlie when it comes to trading Priceline. Okay, so thanks for that call. So we took a look at what was going on in the 5-hour charts. We took a look at Monster Beverage. We've taken a look at Priceline. We've taken a look at gold, so you have a pretty good idea as to what's going on in gold. What was interesting, yesterday was a holiday. The pullback inside of the miners, if we take a look at the XAU, Oh, didn't mean to do that. Let me see here. There we go. Let's take a look at the XAU, but let's now switch back over to a daily time frame out here. And as we look at the XAU, what's really important, so you've got gold that has broken out above some areas of resistance. That suggests higher price, right? And in the case of the XAU, the HUI, many of the individual gold mining stocks, they too now have a area of resistance. Key reversal bars in the XAU. Now, key reversal bar requires three things. You have to be in an extended condition. Otherwise, it's really just referred to as an outside day. In this case here, we're going to say that it was an extended condition, just using our relative strength indicator, some of the A to B equals CD patterns, and some of the strong individual stocks inside the mining sector. So that's condition number one. Condition number two, you've got to have a bar that's both above and below the prior day. And then number three, you've got to have a tick close in the opposite direction. That just meant in this case here, we had to see a red candle. Well, you had a key reversal bar. You had a bearish engulfing session. You actually had some decent volume. It was, let me see here. Let me get the volume back on the chart out here. It says it's on the chart. How come it's not? Oh, maybe why isn't it out there? There we go. No, that didn't work. Huh. Oh, okay. I don't have the volume on the XAU. That's why. Hello. Is anybody home? Let's go take a look at the GDX. Sorry about that, folks. So let's go take a look at the GDX out here. Now we've got some volume. So yesterday, and the point is this. If, in fact, you see the GDX, which has got a bunch of weak stocks in there, but we'll go take a look at some of the strong stocks, the XAU, the HUI, if you see them close above yesterday's high, another rejected area of resistance, just like we'd be looking at inside gold. Now, the last time we saw an outside day, I don't know if that was really a key reversal bar, but an outside bar was on August the 21st out here. Price went ahead and pulled back. So volume today inside the GDX, 19 million shares after pulling back was 73. Yeah, boy, that is really light volume. Let me see here. Let me go put that into the Stevie calculator. So we're at 19 million. We've traded for about 4 hours. Says we're going to do maybe about 30 million today. And yes, wow. Yesterday we pulled back with 73 million shares. So there is, and yesterday was a holiday. I don't think anybody's celebrating Columbus Day today. So there is some trouble in River City when we take a look at the miners. Let's go take a look at those strong dogs out here. GOLD, Randgold specifically. You can see Randgold failed on price and volume at its previous swing point. That was August 21st. That had volume out there of 1.4 million shares. Yesterday, 905,000 shares. Somebody might write that off and say, it was just a holiday. Well, it was a Billy holiday out there, 408,000 shares today. And if we take a look at what that means, 408 is the equivalent of 663. And yesterday pulled back with 905. Yeah, there's some problems out here inside of the strong indices, inside of some of the strong stocks. I apologize. I know that there's some issues, some lawsuits and things of that going on with regard to inside the mining sector. But nonetheless, let's go take a look at our profiles, market profiles out here. Daily, and so this is where it gets kind of interesting and dicey. Look, inside of Randgold, a nice pullback would be about the 62.44 level, and it looks to me like that's, just simply from a volume perspective and a rejection of the swing point. If in fact Randgold closes below the low, we'll call it the low of August 21st at 65.37. Then that says, okay, you pull back into the 62.44 level. At least that becomes the first area where you would take a look at it. Likewise, if you close above yesterday's high, then all bets are off. You're headed to the upside. Inside of Randgold, that says you probably move up to the prior swing points in the $77-ish area out there. Let's look at one of the weaker ones, one of the weaker stocks. Not Agnico Eagle. Let's take a look at Barrick Gold, ABX. See what it's doing. You'll see a similar pattern out here, a similar pattern with regard to yesterday. Now, yesterday was really not a failure of anything, but we can see that the pullback was 19 million shares. Today, you're up with 9.7. So 9.7 is the equivalent on a straight line basis of about 15 million shares. So it looks like a small A to B equals CD is a downside. Or in the case of Barrick Gold, it's interesting. It's interesting. $7 $7 ought to be a decent. So the pullback here may not be too bad. $7 on Barrick Gold. We'll certainly want to watch that. But look, if gold continues moving to the upside, these mining stocks are not going to stay down for very long. If we take a look at the euro, Japanese yen, let's go look at some currency pairs out here. Strong day a couple of days ago. It has taken the day off here the last couple of days, so not really providing you and I with any kind of message other than it's got some upside resistance a bit higher around the 137 area. And that's an important currency pair for you and I to be watching because of its relevance to the direction of the stock market. Let's look at some of these stocks here that are moving to the upside and to the downside. You've got Molson Coors, TAP out here. If we take a look at that, what's moving TAP? Is that part of the no, not part of anything, but it is leading the charge. This is gapped up here this morning. It doesn't look like, well, we might be at all-time highs. Let me put this on a monthly chart out here. Yeah, we are. So you've got Molson, Coors, Brewery. This thing has gapped up today, so let's go see what kind of volume we've got behind the move. This thing had a nice sign of strength back on September 16th. 20 million shares. You've done 11 million shares today, so a bit lighter. I guess we just need to watch tomorrow's activity out here. It is taking out a B point with volume. That B point is September 21st, so this could easily be an A to B equals CD to the upside inside of Molson Coors Brewing. If, in fact, that's the way that it turns out, that price projection for you would come in at about the price point of $100. About $100 even, Stephen. 106 out there, I would say, more likely than not, on a continued move higher inside of TAP. If we go take a look at, let's go take a look at Tesla. We know that our man Agaro trades Tesla out here, and he was going to trade that down into about the 215-ish area, if I'm not mistaken. Looks like here earlier this morning got down to about the 211 area. Right now, the yellow line going across my screen out here is 220.37. That's the area where there was all of the volume on that August 24th day, and it looks like it's really trading right at about that range right now. Any close back below 220.37 says it goes down to test out the lows out there, maybe bust out those lows at the 195 even Steven mark out there. That's what's going on inside of Tesla. Let's take a look at Regeneron Pharmaceuticals. Regeneron REGN off $10 out here. Let's go see what it is doing. Not much. Did gap up yesterday. Volume behind the move yesterday about 1.3 million shares. Today pulling back with about lighter volume, 467 out here. Of course, Regeneron Pharmaceuticals looks like this may have completed an A to B equals CD to the downside. Let's see if it actually completed that pattern out here. Yeah, it did. It completed that pattern back on September the 28th. Now we're seeing a retracement. Volume-wise, looks like to be lighter volume on the way up. Let me get rid of a couple lines out here. Regeneron Pharmaceuticals ought to find resistance at about 519 to 519. Where did I come up with 5? Yeah, no, 519. Where the heck did I come up with that figure? 545 to the 554 level is likely the extent of the move inside of Regeneron Pharmaceuticals. On the other hand, if it closes back down below the price point of 508.93, it goes back to revisit the lows from September 28th. That price point is 435.51. And that is on Regeneron Pharmaceuticals. Okay, so we've taken, let me see, what else we have that's big to the downside? Hardware International, that looks pretty horrible. Can it be pretty and horrible at the same time out here? What do they have going on? Investigation, some kind of investigation. Well, that investigation has led to a second gap to the downside, this one with even more volume than the one on the trading session of September 2nd out here. Let's pull this back. Let's put this on a weekly chart out here. Let's go ahead and see what destruction. This thing looks basically horrible. You've got a hammer candle all the way back at the next lower swing point, which is back on July 27th. Its all-time low is what it looks like, $18.40. Looks to me like that is where this equity is headed to, maybe even beyond that. You've had some major volume coming out of this thing over the course of the last few weeks out here. That was ticker symbol HTWR. rider systems, I believe they guided a bit lower. If I am not mistaken, yeah, they did guide a bit lower, and the stock, they were guiding the stock lower as well. That's trade now at 68.94. The next time that this thing finds any kind of volume, let me turn that off. Sorry about that. The next time this finds any type of volume is back here on the weekly chart is April 22nd, 2013. So it looks like this could easily be targeting the 52.58 to 57.70 level. You're trading at 68.91 as we speak. Right now. That is ticker symbol R for rider systems. Okay, so let's switch gears here and switch gears. What do we want to look at as long as we're switching gears here? Let's go take a look at some of the sectors inside of the S&P 500. Let's start off and take a look at numero uno, which is the XLK. Let's go get a feel for what this is doing. See if there's really any information out here that can help guide us. Now, in the case of the XLK, the old level of support was about $41.87. We're really close to that level right now. So far, intra-session high has been $41.69. And so the key will be, now volume-wise, if we take a look when price gap down below, that was 13 million shares. Today, so far, you're up with about 5 million shares, 4.92 to be exact. So maybe this has a little bit of room to run to the upside. 41.87 is going to be a key level. If, in fact, it can move above that. What the XLK has, as you can see out here, it's clearly shown, and that clearly shown happens to be this island reversal right here. So it's got a very bearish pattern. Again, nothing more bullish than a failed bearish pattern. If by any chance we're able to see the XLK take out the 43.81 level, that would be very bullish for the market out here. The next line of defense above the 41.87 area is going to be about 42.89 or so. That is on the number one sector inside of the S&P 500. If we go take a look at sector number 2, I believe it's still number 2, that would be the financial sector, the XLF. Let's go see what it is doing. No island reversal, Mon, but what it is doing is really not a whole lot of anything. So where is this headed to? Where out there headed? Let's see if we've got anything that shows up on our profiles out here. Actually, the price is above the daily high, I would say, and the new weekly profile that established itself last week says that this should move to 23.98. It's actually set up more as a bullish versus a bearish type pattern out there. Something to think about. Let's go take a look at one more sector. Let's do the healthcare sector. Sector number 3, weighting structure number 3 in the S&P 500, the XLV. Now, the XLV has tested its October 5th swing point. That had about 18 million shares. You're going to do that, well, it looks like on light volume, yeah, you're going to do somewhere around 16 million shares. So if this were to close below 69.02, you would have a failure on both price and volume inside of the XLV. If it moves higher, if it closes above that level, 69.02, then price is likely going to head to the $70 mark, maybe even 71.17. If we take a look at the, so we took care of that. We're going to break. So I'm going to rest these vocal cords out there. You grab a Molson. And we come back from the break, we'll say, cheers, kompai, Nostrovia. We'll say everything we can come up with to toast yesterday's Columbus Day. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
You know, we were trying to get this market all revved up for David White. Nothing like watching paint dry. And it seems like that's what we've been doing here the past couple of days inside the markets. Dow's up 21 points, no big deal there. S&P's off 7, composites down 18. Back on those 5-hour charts, I took a look at those during the break. Nothing that's really changed substantially since we began the show, so no reason to waste our time and go back there. Again, we looked at on the 5-hour charts. We looked at how there are some at least short-term topping signals that are in play. If we take a look at the so let's do this. Let's spend our time here where it's valuable. That's not where I was looking for. Not that it wouldn't be valuable there, but that was not what my intent was. My intent was to take a look at this chart. So here's what you and I know. We know that we're off the bottom big time. And when I say big time, we've got some substantial bottoming signals. You've got several. You've got hammer candles from a couple of weeks ago and some follow through to the next and on a weekly basis. We haven't seen weekly hammer candles across the board in almost like forever out there. So we see hammer candles every now and then, but not across all the indices. I just have the composite, the Dow, the S&P, and the Russell up on my screen. We can see the same thing, I believe, inside the NDX. As well, maybe even the SOX. I don't recall off the top of my head, but they're all over the place out here. Even inside the IBB, as an example, if we look at just some of the hammers, here's 9 charts from way back on the week that ended September 28th, and all of these are hammer candles, all back at levels of support. None of these have failed to the downside out here, and this is the sector that has been the weakest out here. We take a look at the IBB, lower left, lower right. We can see that price really just came back to a trend line, tested it. There's your hammer candle the week that ended September 28th. As long as we don't see a close below that low, I don't know what that is exactly, 285.60. I've got my little data box turned off. Then things are okay. So even the weakest sector has actually given us some potential buying signals. Look at here's one for you, CEMP, Sempra Inc. Completed a 1-to-1 A to B equals CD. Now, when you complete a pattern like this and you're going to try, because I would never tell somebody to buy, off of this hammer candle, because look at where you're at. You're at 31.73. The bottom of that hammer is around $24. But now, for those of you that want to, I'm not saying go ahead and do it, but the trade is pretty easy, because any close below that hammer candle, what we know is that price is going to come all the way back down into, it probably comes back at least to the bottom of this bar here around the 22.48 level. That's where we had a real breakout on the first week in January 2015 out here. So that's its big volume. So this really should have some pretty decent support. But you would like to buy a hammer candle somewhere between halfway inside that wick all the way down to the bottom of the close of that trade if you see a closing price below the low of the hammer candle. You can always jump back in. Much easier to jump back in. So where I was going with this, I believe, in the next minute, as we take a look at the indices, we looked at gold. We looked at breaking of trend lines out here. The only indice to have broken through its trend line as we speak right now, and the trend line I'm referring to is off of its highs, is the NDX 100. So if you take a look at the trend line from July 20th, that high is 46.94. That's your first touch point. We're going to go ahead and use September 17th as our next touch point out here. We can see price broke above it 2 days ago. Today, in essence, came back and tested it. It's rejected it, just like inside gold. If price comes back inside it, says price heads down to 43.03. You break through 43.03, you probably head into about the 41.85 level. Otherwise, if you take a look at each of these indices, we're fighting between two trends: the long-term trend from March of 09 and the short-term trend off of the 2015 highs. That makes these markets just a bit dicey to navigate in either direction. Folks, stay tuned. David White's up next. Have a great day. Look forward to seeing you on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.